To me, it's so obvious. This is why I believe Bitcoin is going to go up in this monetary debasement era. They have no choice but to print the money. The question is, what's the fastest horse? What's the scarcest horse? What's the most divisible horse? What's the easiest horse to save and trade? That's a global horse. It's Bitcoin. It's Bitcoin. Bitcoin's going to continue to absolutely demolish stocks. But generally speaking, the coolest part about Bitcoin is everyone's ideas, everyone's thoughts, everyone's words are judged on their merit. You're judged on your proof of work. This isn't a credentials-based system where because you were someone in the past or because you went to Harvard, like your opinion matters more. That's just not how it works. So
investors worldwide are wondering if Bitcoin is prepared for its next major move as the U.S. faces increasing uncertainty. Strike CEO Jack Mallers gives us his thoughts on Bitcoin's price movement today and explains why he is more optimistic than ever about the cryptocurrency's future in 2025. According to Mallers, Bitcoin already accounts for nearly 1% of global wealth, which is an incredible accomplishment for an asset that didn't exist until 16 years ago. He thinks the stage is right for Bitcoin to march toward $1 million per coin, especially with BlackRock jumping in with its iShares Bitcoin ETF. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
This, in my opinion, and I know a lot of you in the comments are like, I don't understand what you're trying to say. I don't get this. How is this benefiting Bitcoin? Stablecoins and Bitcoin grow in tandem. The fastest way to grow stablecoins is to grow Bitcoin, okay? That's the Tether and Bitcoin have a ratio of somewhere between 2.5 to 10x. The Bitcoin market cap Bitcoin is substantially larger than stablecoins, and the fastest way to grow stablecoins is to grow Bitcoin itself. And so the US is going to try and solve this problem by growing what they call the digital asset economy, by, quite frankly, finding new treasury buyers by growing the de facto trading pair to Bitcoin. So TLDR, nobody wants bonds. They're going to try and save it with stable coins. Tremendously bullish for Bitcoin. Gold is flipping treasuries. We are officially, I don't know how else I could put it cleanly, we are officially entering a new monetary era. And this graph here, guys, literally shows it. It is no longer hypothetical, despite stock market at all-time high, despite inflation starting to pick back up again. Does that make sense? Do you understand now? Trump versus the Fed? Do you understand now the pressure these guys are putting on Powell in a very simple graphic? To me, it's so obvious. This is why I believe Bitcoin is going to go up in this monetary debasement era. They have no choice but to print the money. This just shows how overweight the world is in US equities. So this is an ever more imbalanced world. A decade ago, the US would have half the world stock market. Now it's 2/3. Look at the size of this. I mean, it is just outrageous. And so for me, I mean, this is a slide that I wanted to put in just to showcase that, be careful in stocks, okay? It's not clear to me that equities are going to perform like people think they will. They'll perform in nominal terms. In dollar terms, they'll perform. They have to. The US needs stocks to go up to get the tax receipts to finance a lot of their debt and payments. So the stock market has to go up 10 to 15% a year forever, according to the current financial system we're in. That's why you've got the S&P 500 at 10 to 14% CAGR. That's what it is. But the S&P 500 gets demolished in Bitcoin terms. Bitcoin's CAGR is 50 to 60%. And so be careful, because you might find yourself buying what a lot of money is selling. Look at how much money might have to sell to finance domestic crisis or finance payments to the United States. The stock market is a global savings account. The US dollar is de facto backed by two things, the US military and the S&P 500. And the S&P 500 is really made up of these 6 companies. The question is, what's the fastest horse? What's the scarcest horse? What's the most divisible horse? What's the easiest horse to save and trade? That's a global horse. It's Bitcoin. It's Bitcoin. Bitcoin's going to continue to absolutely demolish stocks. Bitcoin is the same way. Because of proof of work, Bitcoin is governed by the physical realities of the world. You cannot just print these things. Now, when the US divorced itself from the gold standard, it allowed to be printed out of thin air, these US dollars. When we decided to do that, and we decided to be the world reserve currency, we took on the role of exporting our currency. That was our primary export and still is to this day. So we run what's called a twin deficit, okay? We run these deficits where we export more dollars than we bring in. US Treasury bonds have negative returns over the past 5 years. Tack on inflation, it's even worse. This has been an awful decade for fixed income. Again, guys, it could not be more simple. The math doesn't check out. You cannot own bonds. You have a choice. You and your loved ones and the people you care about. You own Bitcoin, you're going to get more housing, more vacation, more food, more education, better lifespan, better life expectancy. You own bonds? Sure, you can own bonds. Listen, I'm sitting out here in the mountains. It's peaceful, fresh air, good vibes, good mood. You can own whatever you want. I'm just letting you know, you're going to get less housing, less education, less food, less life expectancy, less everything that you want. Your life gets more expensive and unattainable when you own dollars, fiat, bonds, fixed income. I'm sorry.
The increasing use of Bitcoin by institutions, governments, and the media indicates that people are beginning to recognize its worth. However, Mallers says this is just the start. He calls it a significant stride in the financial sector and draws comparisons between the early days of Bitcoin and the current wave of interest, particularly the focus on Bitcoin ETFs. He notes that Larry Fink's BlackRock is leading the charge to get these ETFs approved by the government. Mallers contends that actions such as these demonstrate Bitcoin's enduring value as an asset and its function as a hedge against currency devaluation. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Bitcoin is scarcer than everything else you consume. So everything else around you gets more affordable, gets better, gets more attainable. You're going to get more housing, more food, more education. You have more kids. You're going to live longer. It's a choice that you have to make yourself as a sovereign individual. Unfortunately, the government is not going to make it for you. In fact, they're going to do the opposite. I think Bitcoin's going to heat up. Gold usually runs first. Bitcoin outperforms. We're entering an era of monetary competition, and we're just getting started. Rocks are outperforming bonds, guys. They have to print the money. All new investment into this country has to come through printed money. All strategic relationships with those that have real, raw world commodities is going to have to come through printed money. In order to reindustrialize America, bring back the middle class, the dollar has to get substantially weaker. Bitcoin fixes this. Bitcoin fixes this. You know, one of the most important properties of Bitcoin is that there is no single individual that has any, controlling role or authority. So I love Nick. I think we're all forever in debt to Nick's contributions, even before Bitcoin. Just his work in monetary theory, monetary history, what he's obviously been able to contribute to cryptography and what has become Bitcoin. What Satoshi did was really take a bunch of independent innovations, and his innovation was combining them all in a way that worked. Here's the thing that I don't think people understand. In order to change Bitcoin, you have to convince everyone that actually runs Bitcoin to update their software. So, I remember Roger Ver had the most Bitcoin in the world, and he invested in all the biggest Bitcoin businesses, and he got all of the businesses like Coinbase to try and force change down all of our throats. But guess what? We, the people, didn't want to change. And Bitcoin didn't change. But generally speaking, the coolest part about Bitcoin is everyone's ideas, everyone's thoughts, everyone's words are judged on their merit. You're judged on your proof of work. This isn't a credentials-based system where because you were someone in the past or because you went to Harvard, your opinion matters more. That's just not how it works. So I'm glad Nick's back because he's smart and he's been a net positive for Bitcoin, undoubtedly. But, we'll judge what he says based on merit, right? I don't know if that makes sense. But these OGs, as you call it, they don't have any outsized, they don't have any greater role than you. You can create a company just like Adam has, just like I have. You can run a Bitcoin node just like Adam does, just like I do. Anyone can be anything. And consensus is the only way to affect substantial change to the protocol. And we all are competing in a truly free market where the best ideas and the best merit, the best proof of work is what lasts.
Jack Mallers ends with a stirring statement about the state of our economy and the significance of Bitcoin. He notes that harsh measures like yield curve control and huge money creation are likely to be implemented if the Treasury starts to supervise the Federal Reserve. Over time, that will result in more inflation and a significantly depreciated dollar. In these situations, gold has historically responded first, but Bitcoin usually performs better over time. According to Mallers, this marks the start of a new era of monetary competition in which Bitcoin, gold, and conventional currencies are vying for value and confidence. He explains that since all significant investments and international commodities deals will eventually be financed with printed money, America's efforts to reindustrialize and rebuild its middle class cannot be achieved without depreciating the dollar. Bitcoin is the only asset in that type of economy that is resistant to inflation. In contrast to traditional money, Bitcoin is not centralized, meaning that no government, business, or individual can control or alter it. Mallers emphasizes that the distinctive feature of Bitcoin is that it is not a credential-based system in which authority is determined by your connections or background. Your ideas are evaluated based on your proof of work in Bitcoin. Everyone has an equal voice, and anyone can manage a node, contribute, or create a business around it. As a result, innovation and ideas are genuinely free to circulate. Since there will only ever be 29 million Bitcoin, he reminds us that it is one of the only things that is truly limited in a world when everything else can be generated or printed in large quantities. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.